Hello, this is Brian Resney, president of Resney Wealth Management, bringing you an important update about the economy and the investment markets. We are firmly in the summer. Second quarter ended. Earnings reports are currently coming in from corporations around America, and they are quite exceptional. It's early stage, of course, but what we're seeing on earnings are very good. This bodes well for the U.S. economy. This bodes well for the U.S. stock market. But remember, volatility is normal. 6 steps up, 2 steps back, normal volatility. I would not be shocked that we see a 5%, 10% pullback before we hit new high ground, potentially by the end of this year, just because we're in those summer doldrums. And as you know, we've talked about this many times, the Iran conflict is back on. Let's say about a month ago, the administration came up with a 60-day ceasefire, and I said, there's no deal. It's kind of a deal's not a deal till it's actually a real deal. And of course, Iran was back to the same bad acting and doing what they should not have been doing. And so, of course, we're back in 12 days of bombing again. I think this will continue on and off until at some point Iran actually comes up with a real agreement. Whether that actually happens, who knows? But the U.S. economy, in spite of all this, is going to do quite well. When I look at what's gone on with the other parts of the world are not doing quite as well as the U.S., of course, because remember, how the U.S. does, we do drive the growth of other economies, but other economies and governments are not well run. Socialist agendas with a lot of these countries are really hurting their overall growth long term. And I think investors need to understand why we are U.S.-centric right now. And that will probably continue for some time. We always look for new opportunities. And of course, if we need to make portfolio adjustments, we will. But again, 6 steps up, 2 steps back. One of the things I want to bring up is SpaceX. We had a few clients ask, hey, are you going to look at SpaceX down the road or when it comes IPO? The IPO on SpaceX, by the way, came in at 135 a share, which nobody could have bought unless you were part of the initial IPO. So probably the best an investor could have bought on the day the SpaceX came available a few weeks back was maybe 155 to 160 bottom line. Within about a week, it raced up to 220. Now it's raced back down to 115. So essentially, SpaceX has lost about half of its value from its high a few weeks ago. This goes back to why we did not buy SpaceX. It's highly valued, overvalued, grossly overvalued. Now, that doesn't mean we're not looking at it. We didn't want to buy it at 220. Now that it's 115, could we see $30 to $40 price on SpaceX down the road? There's that potential. Could it hit new high ground before that? That's a potential too. But we're looking at SpaceX. Again, we do not rush in and just randomly buy investments. We do not buy speculation. We are not a speculating firm. We buy hardcore research. We make hardcore decisions, tough decisions, and there's always great opportunities out there. Just remember that. That's what you've hired us to do. Keep the emotions out. Bottom line, we look for greener pastures in the U.S. economy. We're looking for potentially higher equity prices by year end. These all bode well for your account. One thing I want to bring up, we had a client that called, and again, I really appreciated that this client gave a call because I've had these calls before. And the client call kind of went like this. He said, Brian, I'm working with this accounting firm, and they're basically promising tax reduction strategies. So let me explain how this works. I've talked about this repeatedly with all of our clients. There is no magic bullet to reduce your taxes. There are some subtle things you might be able to do temporarily to bring down a little bit of taxes. But at the end of the day, this client's a smart client. And he said, Brian, after talking with this CPA firm, I wanted to know if they were legit. What I explained to this client is this CPA firm is actually owned by a bigger brokerage firm. And what they do is they market after their clients. So the accounting firm is basically a marketing arm for the brokerage firm to sell them, in our opinion, subpar investments. This is very typical in the industry when you're dealing with fee-based and commission-based advisors. They buy accounting practices. They use it as a lost leader to basically rape and pillage. I hate to use that term, but basically go after these accounting business clients and then sell them unsuspectingly garbage annuity insurance products or gimmicky investments that are either tax deferred or tax-free supposedly. None of this stuff works. If you think you're going to reduce your taxes, you will not. This client was smart. He goes, Brian, what I realized is what they told me at the end is if I make less money, I'll pay less taxes. Again, I applaud this client, and I'm glad he called and had this conversation with me so that I can relay this to our other clients who don't try to do these mistakes. There is no magic bullet. If Resnick Wealth Management does what you are paying us to do, which is make you money, if your $2 million account is $4 million, let's say in 6 years, you're going to have double the capital gain, double the dividend, all of your income goes up because your portfolio is substantially bigger. That's what you're hiring us to do. Now, remember, there's a lot of gimmicky advisors out there. 95% of advisors are not fee-only fiduciary. They might be fee-based, quasi-fiduciary. They all sell product. They all try to basically coerce you into things that are not correct in your portfolio. We do not do that. We are a fee-only fiduciary money manager, and we basically are always fiduciary legally working for our client's best interest. So what we're going to do as a firm, we're going to maximize profits. You will pay more taxes down the road if your portfolio is substantially bigger, which our clients' portfolios have grown substantially over the years. And as always, watch out for these gimmicky scams, the emails, the phone calls, your accounting firm trying to sell you something that is not going to work. If you want to reduce your taxes, the only way to do it, and this came from a smart client, they're telling me I have to make less money. That's completely ridiculous, as you know. So again, I applaud that client. I applaud all of our clients to be smart people. Don't fall for gimmicks. And remember, there's a lot of scams out there today. Be very diligent when you answer your phone, check an email, and so on. If you're a client of the firm, of course, and you have any questions or concerns, please call the office. Let's talk. And as always, if you have any friends or family who need the same high-quality money management you're receiving, please refer them to us. We appreciate your business and your referrals. Have a safe and profitable day.